At Searchfunder, we are a community for people who are looking to buy and operate a profitable business, and we help you along the journey from that exploration phase of, well, is this right for me? Can I possibly do it? Into that phase of, oh my gosh, I'm really doing it. Into that, oh my goodness, I am now the CEO of my own business and beyond. So we really want to help you along your journey. So if you are, whether you are a Searchfunder member or not, please feel free to reach out to me, Karen Spencer, or Mark Wan, or Luke Tectone, founders of Searchfunder. So I want to welcome Steve to this Searchfunder session. He is a serial entrepreneur with several successful exits, particularly in the GovTech space. He has been associated with 7 search funds in the search community, and he is a longtime Searchfunder member. We probably had about a third of the platform that we have now back when Steve joined us. So he's lived through the ups and downs, and I want to make sure that we spend all of our time on Steve. So Steve, welcome, and I look forward to your presentation.
Thanks, Karen, and thanks, Luke and Mark, for putting together such an awesome community. I just really enjoyed it. And I'm going to have slides today. If you want a copy of the slides, just email me. It's sressler@gmail.com. So feel free to take notes. But if there's a bullet point or whatever, just send me an email, copy the slides. And the title's a lie. I think I have more than 5 tips. So I started going and I got more, but really hoping for a fun conversation today. I'll pass on a lot of information. Hopefully we'll also have time for Q&A, and just excited to have all of you on the call today. I know it's tough to be a searcher, and as Karen said, different evolutions of the journey, the folks thinking about search and the folks doing the hard work of finding a business or doing it. Kudos for you for all your hard work. Let's see if I can push the slides. How do I do that? Oh, there we go. So that's my background. I had a little bit more hair back then from that photo. The photo's a lie. But my background is I'm a serial entrepreneur and CEO, primarily in government technology. So I went to Miami of Ohio for undergrad during the Roethlisberger era, if there's any Steelers fans out there. I went to Penn for grad school right away under a scholarship and spent 2 years working for Homeland Security and technology. I eventually launched a company called govloop.com, which was an online community for government employees, kind of a search funder, honestly, for government employees. And we had 250,000 members, fed, state, local government employees. And we eventually bootstrapped. We sold that company to a company called GovDelivery, which was kind of the MailChimp or Marketo for government, all the text messages or email from everyone from healthcare.gov to your local city and county. That company, we grew from 7 to 40 million ARR, sold it to Vista Private Equity, the largest software investor in the world, where I was the chief marketing officer and learned a lot about scaling SaaS businesses. I eventually joined a friend who had a small public safety software company called Collia, where I joined as the president, and we grew that business and recently sold it to Motorola Solutions. So kind of my day job is as an entrepreneur in government technology, SaaS, software, private equity. And then personally, I've always loved investing. So one of those folks who had a Roth IRA at 14, I think, read the Buffett letters and the Graham books and Constellation and Outsiders, and just always loved kind of value investing. I had done a little bit of DC technology angel investing, and I loved meeting entrepreneurs. I loved talking about new businesses, but I didn't love the 9 strikeouts for 1 grand slam, which is angel investing. And I eventually found out about search. A friend of a friend had done search, and just it really clicked in my brain. And I read the books we've all read and the podcasts we've all listened to and Searchfunder. And so I got involved as an investor. And generally, I think there's 3 ways as investors to invest in search. So one is investing in traditional search. So if you were going out and raising say a $400K fund, usually out of school, or you can invest in funds that do that, Pacific Lake and Footbridge and others, or you can invest in self-funded search. And in terms of traditional, I generally don't do traditional search investing. I invested in one fund, Footbridge Partner, which Greg's a big active on Searchfunder too. They do a great job. Sometimes I invest in equity gaps on traditional, but I primarily do self-funded search. And I've made 7 investments in 2020, all sizes and shapes, and a couple more coming. So really enjoy investing in self-funded searchers. And I get a lot of questions from folks from self-funded searchers around the process, what investors are interested in, different questions. So that's really the presentation for today. And other than that, I think I already mentioned, live in Washington, D.C. I got 2 kids. And yeah, if you want a copy of the slide, just email me, or I'm quick on text as well. All right, so there's going to be basically 5 sections today. So I think there's kind of 5 key areas I get asked a lot around: what does self-funded search look like for an investor? And so these are kind of the mechanisms of self-funded search. So one thing I get asked a lot is, what do self-funded deals look like? So I think in general, we all know the traditional structure on a deal, which in traditional search, as a searcher, you can earn up to 25%, by hitting these various tranches. Investors own 75% or potentially more, and there's usually generally a 7 to 8% preferred. So the question is, what does self-funded search generally look like? And what are some things self-funded searchers should think about once they have something under LOI, how to make their deal structure interesting for investors? So a couple of ways I look at it. So one, I think the IRR target I encourage folks to target towards is the 35% IRR hurdle. So that's the same hurdle as the last tranche of traditional search. I think, generally on self-funded, you should be able to model there, especially because you're using high leverage and you're buying things for generally lower multiples. So that should be kind of the base case for future projections. And generally, I recommend on base case, you're being reasonably conservative. You're using the same entry and exit multiple. You're also having the same growth rates as kind of the last 3 to 5 years of the business, how it's historically performing. Not, hey, it's been growing 0%. My model has this growing 20. The ideal business, hey, it's been growing 5%. Our model shows 5%. I'm going to buy it for 4.5x EBITDA. I'm selling at 4.5x EBITDA, and that measure should get to roughly 35% IRR. Generally, self-funded deals have two parts of it. So there's a preferred interest rate for the investor. Generally, that I've seen that range from 8 to 15%, and the average that I've seen is around 10% as a preferred, and that's a participating preferred instrument. And then in general, there's a question around what is kind of the general common percentage of equity for investors. So it's close to the reverse of traditional search. So traditional search, remember, the investors, are owning 70 to 80%. It's generally roughly flipped for self-funded search. So on average, I've seen the common equity for investors range from 20 to 50%. I'd say the average is around 30%. A couple of things I like to think about when you're trying to figure out what exactly amount of the common it should be is the term of kind of the equity percent step up. So this is kind of concept used in highly leveraged deals, but kind of a simple math around it is, hey, if you were raising $500K on a $5 million enterprise value deal, 500 divided by 5 million, that's 10% is the ratio. A step up of 2.5 would be 25% as the common percentage. So, and in general, when you think about it, as you're building that base case, the 35% IRR, there are levers. You're making trade-offs between the common equity, the preferred return, and then also it varies a little bit on the deal, right? So the larger the deal, generally more equity to the investors, less to the searchers. The smaller the deal, might be closer to that 20% range. And then generally these are done primarily, and we'll show it in the next slides, through SBA loans. Say it's a $6 million deal, they're using $4.5 million of SBA debt. I pulled some averages from the 7 deals I've done this year to give you a sense of what deals look like. So once again, Stanford has on traditional search all this data, and you can really see it. For self-funded, there's not much out there. So I'm not saying these are the 100% answers, but giving you some guideposts and data of deals I've seen. Generally, I've seen deals on the average enterprise value for a deal I've done is $6.5 million. The range has been 3 to 10, so they varied some. Some have been on the smaller side, some are larger. Generally, they're buying them for around 4.5x EBITDA. I've done deals 3 to 6x. And then generally, it's about 80% debt. I've seen, and that debt, I include SBA plus seller debt in there. So they're highly leveraged transactions. So even more so than traditional search. And I've seen deals as high as 90% leverage, as low as 60% in the format. And in general, the equity rates when a self-funded searcher is going out to talk to investors, the average deal I've done is raising about $1.4 million as an equity check. But I've seen ranges on deals I've done from $300K to $2.25 million. So that's kind of some ballpark guidance, and kind of back to the previous slide. I always think kind of, if people say, hey, what's a good starting point? I say, hey, 30% common, 10% perhaps a good starting point in the journey as you start to talk to investors. And then what do self-funded searchers look like? And what industries are they looking at? So, one I've seen is some of it, there's a lot of overlap with traditional search. So you see a lot of folks from the classic private equity, investment banking, consulting, and military, which would be similar. I've seen more mid-career searchers in self-funded. So some of those, maybe they went to one of the traditional schools, Harvard, Booth, Stanford, but 5 years later, after working, now they're ready to do a search. I've seen a number of folks that work at private equity currently, or even more at private equity-backed companies that, hey, kind of learn how to do, leverage buyouts. They've learned how to improve operational efficiency, and now they're looking to buy something for themselves. I've seen a number of kind of Fortune 100 execs. So, depends what you mean by mid-career, but it's a range. It's kind of like the Midwest in geography from Ohio to Nebraska. It's a range. But I've seen a number of folks that, hey, they might know an industry super well, and now they want to go buy a small business in that industry. And then last but not least, I'd say what's interesting, I've seen more technologists lately. So folks that have worked at, the FANG, Facebook, Apple, Netflix, Google, or related, high-tech companies that are looking to do self-funded search, often with a bent towards SaaS software or e-commerce, but not necessarily. Some of those folks still are just kind of interested in the category. And then I know there's a number of international folks on the call. I'd say self-funded search, from my perspective, is a little bit behind in international, but I've met a number of folks that are like the first self-funded searcher in a country. So they said, hey, search is new to X country. We've been doing it for a few years. There's maybe 10 traditional searchers. I'm trying to be the first ever self-funded searcher, which is kind of interesting. And then some other questions around deal terms, deal structures. Again, what do these deals look like? The typical deal terms, a lot is on the searcher. The searcher is the majority owner on a self-funded search. So, it is, as an investor, you're betting a lot on the individual searcher. But there are some rights. There's generally items like majority approval of investors is needed for significant items like, acquisitions, big changes to the searcher CEO's compensation, dilution of equity, major items. Generally, most of these deals have a lead investor. The lead investor typically gets a board seat. It's a typical deal term. And then one thing that's been kind of interesting on deal structure, about 2/3 of the deals I've done have been LLCs. 1/3 have been C Corps. So I know there've been some good threads on Searchfunder on that debate of LLC versus C Corp. If you are eligible for a C Corp, or if you are a C Corp, you may be eligible for QSBS, which is Qualified Small Business Stock, which is a capital gains exclusion. It's Section 1202. And so a number of searchers are starting to structure their deals as C Corp, because if you hold that C Corp for 5 years and sell it, 100% of your capital gains are excluded, up to $10 million per individual person. So it's a great tax instrument. The questions often get around items like, is the business. Only certain businesses qualify for this exclusion. And then generally, if you do a C Corp, you're not paying out dividends over time because you don't want to pay the C Corp tax rate plus the individual taxes to the investors. So often those deals, the kind of pick the preferred interest rolls to the end. So you have to kind of get the investors on board. And other than that, I'd say generally they're done as LLCs. Some do cash distributions along the way, some that are faster growing, try to roll a little bit forward before paying it off. Next section is investors. So how do you build your investor team? How should you think they're investors in self-funded search? So I recommend when you're a self-funded searcher to build a team with a good mix of folks. I think you want professional investors, folks that have seen hundreds of deals. They know how to do deals. They think of it with an investor mindset. I think you want some current and former operators with some, SMB, C-suite, or industry experience. Sometimes I've seen that as fellow former searchers that know SMB. Sometimes I've seen that, hey, that exec at a Fortune 100 company may get one of their past partners to invest in the company. And then I do like having a little bit of friends and family. I think you want folks that are individual. They're passionate cheerleaders for you. They're there because they want to support you in this journey. And you really want to mix. And I think one key thing I recommend is you do want folks that are treating the investment professionally, people that know the nuance of SBA and debt. The SBA has a lot of requirements on the individual investors, just of sharing 2 months of bank statements, which if you've never invested in one of these things and you're a dentist, you're very confused. And as a searcher, it can be a lot of work on you to get all those documents. And then you want some help. You want some best practice of growing companies. So most self-funded searchers do self-funded because they want to be in control and they want to be the boss. But you do want to surround yourself with really smart people that can help you in the journey. And I think you get that out of your investors. In terms of who to target for self-funded investing, generally traditional search investors are not interested in self-funded for a couple of reasons. So one is there's a limitation with the SBA 7A loan program where no individual can own more than 20% of the economic interest without getting the personal guarantee on themselves as well. So and then 20% economic interest ends up being about 13% ownership because of the preferred instrument as well. So that limits basically the traditional search folks' interest in the category. And then generally that limitation limits the check size. So generally you're seeing folks put in 50 to 250K as an investor into these deals. I think the most you can put in is maybe 400K. But that limitation of check size often is uninteresting to folks that are trying to invest larger pools of capital. I think if you have a larger self-funded deal, maybe one that's outside of the SBA limits, I've seen some self-funded searchers do deals like that may require 2 to 4 million of equity checks. That's when some traditional search folks get more interested. Although I would say they're generally looking for search terms that look closer to traditional search in terms of ownership. So, if you're raising $4 million and you're going to traditional investors, you're unlikely to keep 70% common ownership. It's starting to look you'll get pressure to make it look more traditional. And then what's fun is there's a group of folks that are starting to invest more in the self-funded category. As I said, I'm quite active in the space, but I've done a lot of deals with a number of great, smart self-funded investors. Robert Graham's great, a searcher himself who's closed on a transaction. He invests with the group, Search Investment Group. Nick is also on Searchfunder, has bought and owns a series of assets. He has a group called Cub Investments. This guy, Alex Wang at Riviera. And once again, just send me an email. I can send you the slides. Jim Sharp at HBS is the professor on self-funded search there. He only invests in HBS folks. So, and he's got plenty of flow, and I think he's oversubscribed, so no need to send it to him, but he's good if you're HBS. And then there's a number of folks. I often invest with a guy called Alex Mears in DC, Thomas Schulz, Ben Rizzo, a bunch of folks on the list. when you speak into investors, I think I skipped a slide early on, a couple things to do. So as I mentioned, generally you're putting together a team. This is at the bottom. I see usually around 10 to 15 investors on the cap table. Check sizes range from 25 to 500K. As I said, a lot are in that kind of 50 to 250K as you're raising $1 million. Folks raising $1 million, they often look at 1 to 2 people doing 250, 3 to 4 doing 100, and then some 25s and 50. In terms of when to talk to investors, when you're self-funded, I think it's helpful to talk to 3 or 4 connected investors early on. Although I do recommend you don't need to talk to 15 or 20. A lot of investors are busy, and sometimes they have a different day job, so they really want to talk to you once the deal is real and you have something under on a LOI. So I would say spend some time there, but not too much time. People, the self-funded investors often share great deals, so you don't need to know them all, just a couple good folks. And then last but not least on that piece, I would say I have not all great deals I've seen get funded. So if you have a great deal, and there could be variations on a great deal, but think classic search, enduring business, great price, great economics, your background fits for the business, the instrument seems fair to all sides, the investor and the operator, they generally get funded. So I wouldn't worry too much of that. If you find something great, it generally gets funded. What investors are looking for aren't too different than traditional search. It's really why you. So, why are you doing this, right? Why did you get into search? Do you understand what you're getting into? 6 months from now, you might self-identify as a searcher, but to your neighbor, you might be the CEO of a HVAC company, right? So, are you going to be fine with being the CEO of the HVAC company as what you really are? Looking at the team, so not just you, but why this industry? What does the next level of management look like? Is there a good number 2 or 3 in there? Good business fundamentals. I won't go over that. That's in plenty of books. But the traditional search quality, and often I see that sometimes you get a little bit of deal heat, and you see high customer concentration or cyclical businesses or low recurring. And so some of the deals I've seen that don't get done are kind of those, because of those, they don't meet the classic fundamentals. And then last, is it a fair price? Is the deal structured the right way? Does the investor instrument feel within market? And so that's kind of investors. So think about that. So kind of first thing was about deal structure. Second was investors. This is kind of how I think about third-party advisors and how to think about it. So up front, I think there's a little bit of a debate on third-party advisors of whether to use local advisors located in the business in the area you're buying this business, or kind of self-funded experts. And I think the trade-off is, the local folks may help with local connections. It may help you kind of once you're there. Down operating might be easier to work with, a bank with a local branch, or, accountants that know the area very well and can connect you to other businesses. I think the positive of national is they're just familiar with self-funded. So it's kind of a unique sub-industry. So if you go to a local bank and tell someone what you're doing, sometimes they're just very confused of, how to structure this loan or to get their heads around it. So the good news about the national providers is they understand the uniqueness of your situation. And quite importantly, they align their fees to self-funded search. And so what that means is, often it's contingent fees or broken deal discounts, or most of them roll dead deal fees into the next transaction, because most of them realize it takes 3 LOIs to get a deal done. So the local person may, when you're doing a Q of E and then it blows up, probably just wants to get paid. They don't really care, and they don't trust you're going to do a next transaction. But more of the national folks know the game, so they're happy to roll their deals forward. In terms of meeting them, I would optimize your time with them. Meet them before you need them. So most of these folks on this list will take intro calls. They're busy folks, and they're not going to want to do 5 calls with you before. But all of them have told me they love meeting searchers before they need it. But I'd say on your side, try to do as much work you can do and be prepared both ahead of time for your meetings. So, a lot of the one-on-one information you can find online on Searchfunder or elsewhere. And then as you're working with them, the more you're prepared, the more you can help minimize fees. So if you've done your, done preliminary work that you can do, it helps them really focus their time and energy on the things you can't do. And then last but not least, what I like about all these folks is they've done a ton of deals. So they can help you when you may have deal heat around, hey, you really think this is the deal. Here's what I'm seeing. And so the good partners will help that. And then there's a number of them. I'm not going to rattle them all off, but I think one thing I would say is, and I kept this primarily around self-funded advisors. You'll find, if you go to Searchfunder or others, there's some folks that focus primarily on supporting traditional searchers, and some focus on primarily self-funded, and some do both. And I think it's good to know where those advisors sit. So, there's some folks, for example, like Goodwin, I've heard does a phenomenal job at the traditional level. You don't see them very much at self-funded, partly just kind of the pricing and what they do. So, these are just some ones on the list. Once again, just sressler@gmail, sending the slide. All these folks have done numerous self-funded deals that I've been involved with. So that is, if you think about that, that's a little bit before. So we have kind of deal structure, investors, the third-party advisors that do the deal. Here's just kind of some tips post-deal. So, hey, you've closed the deal. One thing I've seen a lot of searchers do is really focus on a 100-day plan. So, there's plenty of this online when you take a new job and you're an executive. 90-day plan's a classic book from Harvard Business School, but really thinking through, how are you going to operate the first 100 days? And really the classic stuff, focus on listening, doing no harm, trying to find low risk, quick wins, where it could be, hey, all the employees have been complaining about this one thing for 5 years and you fix it for them. So really the 100 days really sets the tone. In terms of the quarterly cadence, I've seen often 2 boards where, this varies a little bit by company, but I've often seen 2 boards, an advisory board, which is say the 10 to 15 people on the cap table that meets quarterly. And then they may have an official kind of full, more of an executive board that might be 4 to 5 folks that are truly hands-on, rolling up their sleeves, doing the work. I would recommend on the full board, you find a mix of operators, but also just great classic capital allocators, folks on the finance side, so much of how to drive the business with the financial leverage to help you think through growth, et cetera. As mentioned before, usually the lead investor has a board role. Quarterly reportings, I think really important. Most of the board meetings, you're presenting some quarterly data and you thinking through what are the KPIs you want to share, what tools do you want to use to put out this information. There's great tools. I think Visible is one I've seen on a couple of my investments where they do to share investment updates. Don't be afraid to use investors for ad hoc requests. What I've seen as an advisor to numerous companies is the best stuff happens outside the board meeting. The board meeting, can be a little bit formal and you got 12 people on a call, but the best operators use advisors to help them through ad hoc things. So it might be hiring, hey, I'm trying to hire a CFO. So you tap your finance person. What should I look for in that job description? Or, you might be having an employee matter and you need some guidance on how to handle a situation. Use your investor for the ad hoc requests around that. Another piece around investors, I encourage folks to try to connect investors to each other. Just little things, like I've seen it where, in some of these advisory calls, everyone's BCC'd and on phone, and there's really not much of a community. And then other ones where I've seen, hey, everyone's emails on the item and the videos on the board meetings, and the operator starts connecting folks of, hey, Karen, you really should meet Mark. You guys both have something in common. And that builds momentum and interest and keeps your investors and advisors on board, which is really helpful. A couple last ones. I encourage folks to create an operating cadence of however you want to operate the business. EOS is a popular operating cadence and mechanism used by a lot of operators these days. It's almost like a cult religion, but it's pretty effective. So I encourage folks to check that one out. Other ones are Rockefeller Habits is another methodology. OKRs are another methodology. I like this guy, David Sachs from Yammer. He calls it the cadence, which is his methodology of the quarterly rhythm. And then last, a couple of fun ones. I've seen this done where it doesn't work for all businesses, but a couple ones I've been involved with, they create like a little bit of a friends and family discount that get all your advisors, talking about you all the time. So if it's obviously if it's consumer, it's easy to give someone a 20% off if you're a pool maintenance and you live in the area. But I think thinking of your advisory folks as other folks that can sell on your behalf, even if it doesn't make a ton of sense, but they're your champions out in the field. So find ways to have them help sell for you. Another investment I'm in, and they actually have a blurb. So on every update, they basically say, what we want from you. And the ask is like, we are looking for intros for, VPs of HR in this industry. Here's the actual blurb we use. And you're kind of giving the investors the homework. So you're telling them to sell for you. And then the next board meeting, they say, hey, guess what? Luke's on the top. He gave me 3 intros. So it creates a little competition. So kind of an interesting one. All right. I'm rounding the corner near the end. Here's just a couple small tips. I couldn't kind of exactly find where to put them. So I just kind of put them in my end small tips. One thing I would just say, just find something, in the end, part of why we all get into search funds is we love small business and we think it's a great business model and all those pieces. But I really encourage you to find a company in the industry you're passionate about. You're in the end going to be working in the industry, running this business. And as an investor, you can really tell the folks that are just fired up and excited for the business and the folks that are like fired up for the spreadsheet, right? Like the spreadsheet math is just phenomenal. And I just encourage you to focus on something you're passionate about in the industry and find a way to get excited day in, day out, because you're going to be the one who's motivating the team. You're going to have to be working. You're not working 30 hours a week. You're working 60-hour weeks. So keeps you motivated and going. I'd encourage folks to create an easily shareable one-pager. Often in this process, as you get closer to LOI, you're talking to investors. Plenty of folks have a SIM and a model, and often folks want you to sign an NDA before they give it to an investor. Give the investors a teaser, a one-pager. It doesn't have all the information, but these are busy people. They're on their phone. So is there something they can get a name on the phone, click it, get basic information before responding? A silly one, it's more of a pet peeve for me, but I've seen this help the few that have done it. Try to set up DocuSigns or HelloSign for your NDAs and deal docs. I've seen just a number of folks when you're trying to talk to investors and the thing you're waiting on to book the meeting is getting them to sign an NDA, when they can do it 2 clicks on their phone and sign it versus download the PDF, open the PDF, hit signature. We've all done it. It's a pain in the butt. Make it easy for the people you're working with. And I'd say that both NDAs and deal docs. And a couple other minor communication ones is just, always send the calendar invite. You can send Calendly. You can set it up so it sends a reminder so we make sure we're both there. Clarify whether it's Zoom or phone. And then a small minor one, always confirm receipt of wire transfer. So you're often asking all your investors for do this, and do the confirmation when they do it. Hey, I got the wire receipt. A couple last ones. Really, every touch point is a way you're starting to meet people. So, and with self-funded search, so much is on the searcher. And as an investor, you're really betting on their integrity, their candor, and transparency. And so I think in every interaction you're doing with folks, knowing and thinking about and holding yourself in the way you treat people how you want to be treated, be someone of respect. Be transparent about bad news and risks. If there's something clearly wrong about the business, 40% of the revenues, largest customer, be upfront with it. So I think just generally, it's not rocket science, but I've seen some of the best searchers. That's what they're really good at. They're clear over communicators. They're very upfront. They're by the book. They let you know what's good about the deal and what's bad about the deal. And then they're constantly updating you. So they say, hey, every 2 weeks, if they're in an LOI, they give you the 2-week update. Hey, we're halfway through the QV. It doesn't have to be a 12-page email, just some quick bullet points. They're over communicating as the deal gets to the finish line. So just classic over communications. And I wanted to save time for questions. So once again, thank you for your time. Just email me, sressler@gmail, or send me a text, and happy to send the slides. And in general, I love the search community. It's been 2020 has been a weird year, but search has been one of the highlights for me. Just meeting so many amazing people, super interesting businesses, and bringing a little bit that entrepreneur spirit to America as always, and internationally, which is awesome. Thanks, Karen, Mark, and Luke. Searchfunder is wonderful. What you guys are doing is amazing, and thanks all the searchers. It's not easy out there. I know it's a grind, and if I can help you at all, would love to help, and keep up the good fight.